Hey guys, what's going on? Kunal here, Bulls on Wall Street. What a wild 2018 it's been in the stock market and the crypto market. Holy cow. And as you guys know, wild markets bring out the worst in all of us. You know, when you get this type of market crash or market volatility, what ends up happening to new and experienced traders is a whole lot of bad habits that creep up that frankly apply to every single trader I've ever met, myself included. So what I wanted to do for the next week is take apart one of the deadly trading sins to avoid as a trader. Watch video number 1. We did it on revenge trading. Video number 2 was on gambling. And today, video number 3, we're going to be talking about emotional attachment. Emotional attachment is huge when you're talking about trading. I know, like, when I used to be a new trader and I would study up a lot about a stock, like say you're doing all this reading and research and you've crunched the numbers. When you spend so much time like getting to know a stock, it's like your buddy, right? Like, it's like your buddy and you don't want it to go down. And so what ends up happening is when that stock or particular trading instrument doesn't work in your favor, right? When it doesn't work in your favor, you start to rationalize why you should hold on to it, right? You know, I would be brand new and I'd be like, wow, like I really like this company. I read about it. Oh, the CEO was on CNBC. Oh, the news was good, right? All of a sudden, like you're on message boards, like trying to figure out what everybody else is saying on the stock, right? And you just end up getting so emotionally attached to the performance of the stock that you can't really see without bias. You've got the blinders on. You know, for me now, like as I've gotten older and a little bit more experience, you know what? It's a good stock for me. Something that works in my favor, right? Somebody always asks me, like one of my students always asks me in chat room every single day. Like, I'm like, hey, this stock has news out. We're going to be planning to like, oh, is the news good? I'm like, it is if the stock goes up, right? And if the stock goes down, the news is bad because the only thing that matters for me now is price. Price is the only thing that pays. And so emotional attachment can be just a huge sin when you're talking about trading because remember that these are just tickers, right? They're not people. You don't know them, right? It's just a little number and a ticker on a computer screen. You can move it around, you can sell it, you can buy it, but that's all it is, right? But what happens when we're emotionally attached is, you know, we end up wanting to be right rather than making money, right? It's like so many people have problems like saying they're wrong in things, right? Like you don't want to admit that you're wrong. Well, that's a sin in trading, right? So don't be emotionally attached to your stocks. I've seen this a lot. People become bag holders. I get emails every day saying, you know, what about stock XYZ? What about ASNS or UXIN? The news is so good. I'm holding it from up here. And I'm like, damn, you're down like 20, 30% on this thing. They're like, yeah, but they've got a deal with China, right? They've got a deal. And all of a sudden, right, they got all this information about the stock, right? Oh, but the MACD's going up, or oh, but the RSI is going up. It should bounce, right? And I'm like, dude, you're down a lot on this damn thing, right? I mean, you should have already be out of the stock. So don't become a bag holder. You know, when you have emotional attachment on a stock, you lose rational thinking because, right, you like this thing. So that is just something we've got to stay away from. You know, oftentimes when we have this, you know, we really want a stock to go our way, but it just doesn't, right? And when it doesn't, we've got to go and get out of the trade. We end up holding the bag a lot longer than we want. And you know what happens like when you got this grenade in your portfolio, right? Like that you're down on. It's like a reminder to yourself every day of your mistake, right? And it's just sitting there. And so like when you think about trading, there's capital, right? You have limited amounts of capital. But more important than your trading capital is what? Your psychological capital, right? Your mental capital that you keep when you're trading is just as important as your trading capital. And when you're holding some dog and you're emotionally attached to it, right, it just weighs on you. And sometimes the best way to get out of that is just to cut it. Hey, maybe it goes back and it flies and it makes a bunch of money, but so what? You can always get back into a stock, right? You know, remember what I keep telling you, price is the only thing that pays. We trade trading patterns, not hopes and dreams. And so what happens is if you're emotionally attached to a trade, but it's not showing the pattern or it's not moving the way you want, then it's not the stock for you, right? Or it's not the trading instrument for you. So that's going to be just really important on what we do. Let's talk about a trade where this has happened to me just recently. And so what I want to do with each one of these sins is break up when this has happened to me in the past, and I'm using near-term examples because this happens to us all the time, but what we want to be doing is making sure it happens like once every couple months, right? Or once a month versus every single day. So let's talk a little bit about a trade that got me really going. And I didn't take a loss on it, but I ended up getting back a lot of profit on this thing. So this browser you see here, right? This beautiful black and green browser. It looks like Google Chrome, but it's actually called Brave Browser. Brave Browser is a privacy browser that blocks like all ads, all cookies, all sorts of stuff like that. So you can see like in the last year since I've been using it, it has blocked 1.467 million trackers, 243,000 ads, 424,000 upgrades. It saved me 23 hours. Think about that. It's a whole day of your life. When I go on ESPN, no ads. Man, it loads so fast. When I go on YouTube, you know, and you know when you're on YouTube, right? You see some of those annoying financial educator ads, some dude on a private jet, total dork, right? And he's like, hey, join my program, and I'm going to show you 3 simple steps so that you can, right, fly around in your jet someday. And you're like, God, what a dick, right? I don't want to ever see this ad again. Well, Brave Browser makes it so that when you're on the YouTube, you don't get that. So I love this product. It looks cool. It's super fast, and they've got a coin out. So that like how it works is because there's no ads, they have a tipping system and a publishing system so that content creators can get backed coins for making great content or sharing content, so on and so forth. And so, you know, what I've traded this thing back and forth. So, you know, recently, I loaded up a huge position in this, hundreds of thousands of coins. I just say shares, but I guess they're called coins. As this thing was bottoming out. And I knew that there was a Coinbase listing coming up. Batcoin has only been trading. It trades on a lot of different exchanges, but Coinbase is the big one. And what typically happens is with Coinbase, when you get listed on Coinbase, there's a huge pump in price, usually like 100, 200% sometimes. If you guys saw like Bitcoin Cash or something like that last year, there's been some big pumps. But now, I mean, we're obviously in a crypto dead winter bear market, so the pumps are smaller, the moves are smaller. But yeah, I added this thing, and man, I had like maybe a 16 to 17 cent average, hundreds of thousands of these coins, right? And this thing starts just going up and going up and going up, and you know, you could see like how this thing kind of comes back down to moving average, and it cruises all the way to 40 cents. Now my target on this thing was about 40 cents because that was the previous high. Now, from where I'm at, you know, that's like 100% plus gain. Now, of course, I'm scaling out along the way, but you know what ended up happening was like as this thing came all the way up to 40, I ended up keeping like half my coins because I'm like, man, I love this thing. Like it's going to $1, right? It's going to $1. And I've made some money on it already. So I'm thinking like, yeah, I'll hold this on and see what happens. I love this browser. Right? Like, oh man, like I'm on YouTube, I'm not even getting any ads. Like this thing is going right to $1 or $2. And I spend a lot of time and reading about it and all this bullshit, right? And before you know it, this thing just starts to reverse, right? And on a technical basis, it broke the upper Bollinger Band, it got overbought. So that's just a sell signal in general. Now, on the second part, like I'm up from 17 cents to 40 cents, you know, you're up 100% plus. Now I have sold out some of it, but right, I want that home run. And then next thing you know, right, this thing starts to go down. and it goes down. And now I'm like, oh my God, but I love this thing. Maybe I'll just buy some more if it ever gets back down. And, you know, I ended up selling out flat my last half, and I gave back all that profit on the back half. Why? Because I liked the damn browser. How stupid is that, right? I like the browser, therefore I kept the coin. No, we're traders, and that was, you know, that's just a big no-no, right? And what could have been like a huge win, $40,000, $50,000 or whatever I would have made, it ended up being like much smaller than that, all because I like watching YouTube without ads. So, guys, don't do that, right? We're traders. We trade tickers, and that's it. When you think about how to avoid this stuff, just think like a machine. Remember, right, it's just hit and run. It's funny, like, I mean, people will act around other human beings like so, like, unemotional, right? Like machines, like, I dumped this friend, dumped this girl, right? But with their stocks, it's like they're in love with them, right? Trade based on math, not emotion. Have a trade plan, price targets, your risk manage, all that kind of fun stuff that you need. And they'll marry these things, right? You know, we're traders, not investors. And if you're an investor, you still have to have, right, great risk management, a great trade plan. You still can't be emotionally attached to these things. Always use risk management principles, the principles that I teach in all the webinars, in our boot camps, our 60-day boot camp, our chat room, everywhere you guys see me, right? We're always talking about risk management and the same risk management principles that I've used for just years and years. Guys, I'll be going in depth into this stuff on YouTube Live on December 17th, 8 p.m. for a full breakdown on the 7 deadly sins of trading. Here is the link. Mark it on your calendar. I'd love to see you guys. It would be an honor. As always, if you like the video, give us some support. Give me a thumbs up. Do that subscribe-y thing. And let's have some fun on the 17th. I will see you guys soon. Take care.